Yeah, friends. So let us learn now this capital maintenance concept. This was asked in CA final exam also recently. Right, I think in the last attempt, not very sure. Okay, but fine. A small concept. So let us discuss. Yeah, first of all, I mean, before you ask a question, I would like to clear this is not practical concept, it is theoretical concept. What do I say? This is theoretical. Okay, right. This is a theoretical concept. So because of this, sir, do I need to pass any necessary journal entry? Nothing required. So no accounting, right? No accounting required. What is it basically? Yeah, actually, if you read the definition, I mean the heading itself, you will be able to understand. Capital maintain means you wanted to maintain the base capital. Yeah. So how do you maintain? What is that exactly? We wanted to protect ourselves. I mean, we don't want to distribute too much of dividend and later face the capital crunch. So you don't want to distribute, correct? That's why what are we trying to do? We do not want, I mean entity do not want to, otherwise we'll say do not want to distribute excess dividends. If you give more amount of dividend, then what will happen? You may face a capital crunch. Capital crunch in the sense you don't have necessary funds are not there. When necessary funds are not there, automatically it affects your business, correct? And the going concern assumption, it's going to have impact obviously on your business. Then you have to go and borrow. You need to buy. If you are borrowing means you may need to get at a higher rate of interest. It depends. It will have impact in number of ways. Okay, right. So we don't want to distribute excess of fund. Fine. So how do we do? Actually, this capital maintenance is classified into two types. It is classified into two types of capital maintenance. The first one, what I say, is the physical capital maintenance. Physical capital maintenance. PCM method will say, or people call one more name for this physical capital, operating capital maintenance. Operating capital maintenance. Both are one and the same. Okay. This concept is actually linked with, current cost accounting. It is linked with current cost accounting. Yeah. Current cost means basically replacement cost. It is nothing but replacement cost. If I replace the asset right now, how much does it cost me? That concept it is linked with. Okay. Next one is financial capital maintenance. Financial capital maintenance. FCM short form. Okay. See, when I am talking about physical capital maintenance, first let us discuss the first part correctly and fully. Right. So in this, what is that physical capital maintenance? What are we trying to say? Set aside the profits. I mean, set aside, don't distribute too much in order to allow the business to continue. That is the basic point. Means what? To run the business, if you need say 1,000 mean lakhs you take, crores you take, whatever, 1,000 you need. That means you keep 1,000 with you. If you out of 1,000, if you say you need for business 1,000, if you unnecessarily, suppose you have funds of 1,050, then distribute only 50 because you need the 1,000 for the business purpose. That's it. You keep the necessary capital with you. Over and above that only distribute as dividend. It may be as per the law, it may allow, correct, I agree to it, but don't do it. That may have some problem. So what is the objective? What is the objective of this? The objective of this is set aside profits. Okay, in order to, why should I set aside? In order to continue the business, in order to allow the business to continue. in order to allow the business to continue. You will understand this obviously with example, my dear friend. Okay, yes, obviously I'll take an example and allow the continue at current level, at the current activity level. At current activity level, what you are doing right now, at least you should be able to do the same level of business, right? But here, sir, how do we do it? Actually, right, I'll say first theory little bit one line I will tell, then we'll take the example. With the help of examples, obviously you will understand, right? What do we say? We say adjust opening capital. You adjust opening capital. What do I say? Adjust opening capital with, this is the point, this is the word where it differs from the next financial capital maintenance, right? Opening capital with what is that? Specific, specific price change, specific price change, right? Specific price change which actually hits, which hits the business. See, this is too much subjective, and it is based on the professional judgment. Okay, right, base example, yes, understanding purpose, yes, I can make you understand without doubt, but practically I told you, practically don't think first, because it is theoretical. Say example, let us say on 1/4/2019, assume we started the business on opening capital. Yeah, opening capital, let us say we have an opening capital of 1000. Okay, perfect. 1000 rupees and whatever, crores, lakhs, something you take it. Okay, na? 1000 rupees I'll take. Simple example. Yeah. On 1/4/2019, with 1000 rupees, I'm doing business. Okay, what is that we did? We bought, okay, we bought 100 units. 100 units of some material. Assume you are into trading business at the rate of 10. Okay, so we got the inventory of 1000. Done. Perfect. Okay, we sold it for, you sold for, let us say you sold for, yes, you used full amount of cash, you sold for cash, yes, at the rate of 110. So let us say 1100 rupees you realized. Correct. What is the general profit? This is very simple. General profit for us is equal to how much? 100 rupees is my general profit. You got it. Now the basic question, generally what happens? 100 rupees will be transferred to retained earnings. That is free reserve. Members of the company can take freely. Correct. That is possible. If it is sitting in the retained earnings, then automatically members can withdraw that. Hope you understood. Now one second. Yeah. So this is correct. But the point is here, right? On 31st March 2020, on 31st March 2020, you bought the item at what rate? At 110 rupees each. Now current value, what do I say? Current value. Current value means if you want to buy the same items of goods, current value of each unit, let us say current value of each unit is equal to, let us say 10.75. I say how much it has gone up? From 10 it has gone up to 10.75. So that means what is the percentage of increase? Percentage of increase is equal to 7.5%. It's gone up. I mean, price has gone up. Okay, suppose if you want, what is the words I told you? If you want to do the business at the current activity level, how much you did business actually? I did the business with 100 units. So if you want to buy, if you want to buy same 100 units, are you getting my point? If you want to buy same 100 units, how much you need money? So 100, correct, into 10.75, that is equal to 1075 rupees is what you need capital. Correct. But what is the closing capital actually? What is your closing capital? You already sold the goods, you have money, cash, you sold it for cash, you have money of 1100 rupees you have. Correct. Suppose if this 100 rupees is already being distributed to the members, then you had only 1000 with you. Out of 1100, of 100 is gone for a distribution of profits, then 1000 is with you. With 1000, will you be able to purchase again 100 units? Not possible. That's what we are trying to tell. don't distribute the full amount of profit. Keep the capital with you so that you will be able to run the business at the current level, current activity level. You will be able to run it. That's it, the concept. So that's why what are we saying? What is the profit? Only 25. Only 25 is distributable. Yeah, understood. I hope you understood. Out of 1100 rupees of closing capital, you can distribute 25 rupees maximum. Okay, right. Let 1075 rupees is with the company, so that we will be able to purchase another 100 units and we will be able to run the business at the current capital. I mean, our current activity level, we will be able to. This is what the basic. Got my point? Right. Yeah, you may get one more question. What is the basic question? Just a second. One second. So you distribute maximum 25. That's perfect. Sir, suppose, sir, you said 7.5% is increasing, sir. Suppose it has gone up. I mean, unit price has gone up by 15%. Yeah, suppose unit price increased by unit price is increased by 15%. Then what is that capital? What is the capital required? What is the capital needed? What is the capital needed means 100 units into, I mean, otherwise 1000 plus 15% I can calculate, isn't it? So 1000 plus 15%. 1000 plus 15% means 1150 is there. But what is your closing capital? What is your closing capital? Your closing capital is 1100 only. So do you call for another 50? You can't call for, it will be like negative. That's it. You can't call for, but what will happen because of this? I mean, your price is how much? 15% has gone up means 11.5 is the unit price. Correct, right? 10 rupees item has gone to 11.5. Now what are you supposed to do? You can't maintain. Now it is not under your, what do you call, not under your control. Now we don't ask you to bring the further capital, means up to, if you want to maintain means you may have to borrow it. It's a different case. But here it is a negative. That's it. But what will happen? You will not be able to do the business at the same current activity level. Why means with the 1100, if 11.5, if I do it, approximately 95 units only you will be able to buy. No choice. You do the business only with 95. See, the point is, if it is possible, why to distribute 100? Only distribute 25. That's all. Safe side business. This is just safe side concept. Hope you have understood. Okay, this is physical capital maintenance. Okay, right. Yeah, in case of financial capital maintenance, what is our objective here? Yeah, objective is simple. See, in case of physical capital maintain, we will be taking, what is that here? Just specific price change only is considered. What is considered? Specific price change, which is very important to that business. That item value is considered. You may be purchasing 1000 type of item, but out of that, which is crucial to my business, only that unit price changes are considered in case of physical capital maintenance. But with respect to financial capital maintenance, my dear friend, we don't take that specific, we will take the RPI, retail price index. That is nothing but inflation basically. We will consider inflation. What is the objective? This objective is to set aside. Objective is to set aside the profits as usual. Set aside the profits to preserve the value of shareholders. Value of shareholder. Here, what do? We don't take a specific price. That is a specific price change we do not consider. I'm writing, I'll obviously cut it. We do not consider specific price change. Then what do you consider? Yeah, we consider retail price index. Retail price index. Okay. What is this retail price index? That is, I mean, inflation basically. It is inflation. What is, why are you taking it? This is to reflect the what do you call, purchasing power, current purchasing power. Current purchasing power means what? Nothing. You just opening capital here with respect to, right, in this example, what did I do? 1,000 rupees is adjusted with a specific price increase. Correct. Now here, instead of a specific price increase, what do? We'll add with the RPI. The example, right, in the country RPI is equal to 5%. Yeah, as you know, your opening capital, same numbers I'll take it. Yeah, your opening capital is 1,000. Now 5%, na? That's why what is that you are supposed to maintain your closing capital. Actually, closing capital, you already sold the units, you got 1,100. Yeah, now you are adjusting it. You are adjusting the opening capital. 1,000 plus 5%, you will do it. Now it is, if 5% is not specific to 1 unit or 2 unit. It is a country's inflation rate you are applying. That's it, simply. So what is that? 1,050 is going to come. Then what do we say? 50 is what? Distributable profits. That's it. This is what? Distributable profits. Nothing else. Okay. This is very small concept. That I hope you understood this basic concept. Okay. Thank you.